Welcome to How to Sell More. Today, we're talking taxes. I know. Trust me, this isn't boring. Don't worry. But we're talking taxes and how to avoid paying them with Tom Wheelwright. Now, Tom is a very highly respected CPA. Let's not hold that against him. We're cool with accountants, right? But he's known for turning complex tax laws into understandable wealth building strategies. And he's also the host of the WealthAbility podcast, author of the best-selling book, Tax-Free Wealth, and interestingly, has been a rich dad advisor for the Robert Kiyosaki Rich Dad system. I can't wait to unpack this conversation with him. I'm Mark Drager. Let's get into it. So Tom, this is of course the How to Sell More podcast, but I'm going to ask you and our audience to just imagine that just for this episode, this is the How to Keep More podcast. Because you are an expert at all things tax. I mean, I've never heard of anyone who has a master's degree in tax or has been the author of so many books the way you have, or even was a professor at Arizona State University. And so you have, I don't want to age you too much, but you have decades of experience. Like you've dedicated your life to quote unquote tax. Is that right?
No question. I am officially and full on a tax nerd. So
okay. So I want to dig into this, but I've seen a presentation where you ask from the stage, like, hey, how many of us pay taxes? And then the next follow-up question, of course, is how many of us want to pay taxes? Nobody wants to pay taxes, but there's only two things that are guaranteed in life, right? Death and taxes. And so how do you, after all of these years with the tens of thousands of entrepreneurs and business owners that you've spoken to and you've worked with, how do we approach a subject? We're not going to talk about how to sell more. We're going to talk about how to keep more.
Well, first of all, I'm pretty sure death and taxes are not required. Death is becoming less and less required. We're seeing more advances, so the death may not be required. And paying taxes is definitely not a requirement. So paying taxes is something we do because we don't know how to not do it. And we don't know how to not do it legally. It's like dying. I mean, if we knew how not to die, we would not die. But and they're working on how not to die. The good news is we know how to not pay tax. So there's, looking at the patterns in the tax law, looking at how the tax law actually works in every country, writing books and actually speaking. I just got back from London and speaking engagements in London and Stuttgart, Germany, and seeing how similar tax laws are from country to country. First thing we have to do is recognize that the tax law fundamentally is a series of incentives. And then that's the first thing we have to look at is it's fundamentally a series of incentives. Doesn't matter what country you live in.
So that the government, regardless of region, only has so many levers they can pull to control economy or control private practice or control people. And they use tax laws or incentives as a way to kind of redirect us?
Well, the biggest lever they have is tax. That is their single biggest lever. If you think about it, what gives the US dollar any kind of power whatsoever? It's because US citizens have to pay and residents have to pay their taxes in US dollars. So the only reason that the US dollar has any value whatsoever is because we're required to pay our taxes in dollars. So the reason the Canadian dollar has any value, it's not like it's backed there. These currencies are backed by gold or silver or even Bitcoin, right? There's no there. The only thing that gives them value is the requirement that you pay your taxes in that currency, which I think is why the government's going after Bitcoin, because they don't like this idea of something else other than their currency, right? Whether it's Canadian dollar, US dollar, British pound, whatever it is. And so once you realize that, the single biggest lever that the government has is the power to tax. And plus, the government realized many, many years ago, I mean, John F. Kennedy was the first one to really use it in a significant way, was look at, well, wait a minute, if people hate paying taxes, then maybe a little bit of a tax incentive will go a very long ways. So all we have to do is look at what does the government want us to do? If there's something they want us to do, there's probably a tax incentive behind it. Probably. I mean, that's just how, you can say it's out of control, but it's certainly the horse is out of the barn here on tax incentives, and locking the door afterwards is not going to help any. So we just know that they're incentives. The tax laws are primarily incentives. Then it's looking at what are the incentives? Who are the incentives for? And are they incentives for how we make money, for how we spend money? Or are they both? What are they?
So I interrupted you because I think where you were going with this is there are ways that we can legally not pay taxes.
Oh, for sure. I have tons of clients who legally don't pay tax. Think about it this way. So Elon Musk, Jeff Bezos, when they were starting their companies, the first 20 years of their companies didn't pay any tax.
They probably weren't making any money, though, technically either, were they?
Well, they weren't in the earlier years. They were actually losing a lot of money. But it's not just that. I mean, look at Elon Musk. In fact, both of them generated huge research and development tax credits. So they had credits. It wasn't just that they weren't making money, it's that they actually had big tax incentives that were extra tax incentives. Farmers, you can say, well, farmers don't make any money. Well, they do. They make enough money. They actually do make money. They don't pay any tax.
I've known lots of farmers who make no money, who literally are scraping to get by, but damn, their trucks look good.
Right.
Their barns look good.
Right.
And the harvesters, man. Have you seen the new harvesters? They're amazing. And I go, how are you guys not making any money?
Yeah, exactly. See, my point exactly. And the reality is they pay the least amount of tax pretty much anybody on earth are people in agriculture. Why is that? Well, simply because the number one goal of a government is to feed the population. You don't feed the population, you have riots on your hand. You've got to start with feeding them. Then what do you have to do? You got to shelter them. So of course, there's huge tax incentives for real estate because you got to feed them, then you got to shelter them. Okay, then what do you got to do? Well, now you got to give them jobs. So of course, anybody in business, the huge tax incentives for business owners. Why? Because they create jobs. Okay, then what do you got to do? Well, you also have to move them from place to place. There's a thing called energy. And so there are huge tax incentives for energy. You want to improve the world? Great. Give tax incentives for technology. Now, the U.S. is terrible right now. I mean, we are the worst country on earth when it comes to technology tax incentives. Every other country, literally just about every other country, I wrote a book on these incentives, and just about every other country has more technology incentives than the U.S. I mean, for example, South Africa, not exactly what you think of as, well, let's see, there's the bastion of technology is South Africa, right? They give a deduction, 150% deduction for money spent on research and development, 150%. We don't give any deduction.
Some might argue that America doesn't have to because you guys have all the brains and the brawn and the money and
well,
right?
let me tell you what's happening right now. We had a change in the tax law in 2022, unfortunately. And what's happening right now is you're seeing a lot of research and development slow in the US because the reality is every investor has to look at their return on investment. And if they're not getting the return on investment, then they're not going to put the money there. And so if you're looking at, okay, do I do this research or do I just sell what I've got? And I'm not getting any better tax benefit for doing the research than selling what I've got. I'm just going to sell what I've got. So it does slow things down. Remember, the word tax is to put the brakes on something. It's actually to slow it down. That's the root word of tax, is to slow something down. That's what taxes do. They slow down our wealth. They slow down our progress.
Don't taxes redistribute the wealth to help cover civil services and the things that we need to operate as a society?
They do. They do. I mean, for sure. I mean, nobody's arguing that there shouldn't be any taxes. All I'm saying is I think you get to choose. You get to choose whether you turn a blind eye and just say, I'm going to pay my tax and I'm not going to get involved and I'm not going to worry about it. And I'm just going to pay my tax and put my money in an ETF, right? That's how I'm going to live my life. I'm just going to forget about money, hope that it works out. And that's what I'm going to do. And that's one choice. That is the choice of
too many people.
It's really probably 80 to 90% of the public. It's 80, 90% of the public. Then you've got the choice of, because look, okay, so we're all partners with the government. You don't get to choose that. That is what happens when you're a resident of a country. You are partners with that country's government. You chose to be a resident there. That's your choice. But you don't get to choose whether you're a partner. What you do get to choose is what kind of partner you are. You can be a silent partner, like the 80, 90% we've been talking about, or you can be an active partner and do things the government wants done. So the government doesn't care. Honestly, they'll go either way. You put your money towards things the government wants done. Like, for example, reinvest in your business. Okay. Reinvest in your harvester if you're a farmer, right? Reinvest in your employees. Reinvest in technology. It doesn't matter where you reinvest. But if you're reinvesting the money, the government's saying, look, if you're reinvesting where we want you to reinvest, then you're not going to have to pay tax on the money you earned that went into that investment. That's all they're saying is, look, you're going to pay tax on money you save or you spend personally, but you're not going to pay tax on money that you reinvest. And so, for example, you're always talking about selling and marketing and, lead generation, everything. Hey, well, all the money you put back into lead generation and marketing, that's not taxable income. Remember, businesses get to pay tax on their net, not their gross. Mm-hmm. And so all that money that you're funneling back in. So I have this Mark, I'm in this weird profession called CPA. Yeah.
I'm not envious of you at all.
There is a reason CPA stands for cheapest people in America, but this weird profession where literally I'm talking to people. A couple of weeks ago, we do this conference every year for CPAs. I don't know why, because I'm somewhat insane, but we do, and I have this weird hope that we can actually make a change in the profession. But I kept hearing they were complaining about this idea that they might have to spend like $25,000 or $50,000 on marketing. Now, if I told you that and you're going, okay, how big's this company? I'm going, oh, let's just say they're $1 million. I'm going, seriously, that's like 5% of their budget on marketing. I mean, I'm going, how are you? I've got to believe most companies, we do, you're spending 20, 30% of your money on marketing. I look at one of the most successful private universities in Arizona is Grand Canyon University. They spend as much on marketing as they do on professors. And yet CPAs are like overwhelmed by the idea they might spend 5% of their budget on marketing. I'm going, well, that would explain why you're why you're so small.
And equally, which is maybe where you're going with this, but my mind is already going to so many entrepreneurs, so many marketers, so many creative, I would say strategic, but creative entrepreneurs spend next to nothing on legal and accounting.
So you make a good point. So, you're laughing at the CPA profession because we won't spend money on as a profession, doesn't spend money on marketing and sales and that kind of stuff. And yet I'm looking at you guys, I'm going, I see sales and marketing people all the time. They won't spend $5,000 on hiring a good CPA that could save them $500,000 in taxes. And I'm going, I'm sorry, but my marketing dollars do not produce the same result that your dollars with me would produce from a cash flow standpoint. And I'm just going, all it is look, for years, I mean, I've learned marketing over the years, but for years, I thought marketing was just like magic, right? Which is how marketing people look at what I do. It's magic because, hey, poof, your taxes are gone. That's what we do. It's poof, your taxes are gone. Now it takes work, but it's poof, your taxes are gone. And there's a system for doing it. It's a systematic approach. But the same thing's true with marketing. Marketing, what I've learned over the years is it's not like it's rocket science. I mean, you do this, then you do this, then you do this, then you do this.
Stop. You're ruining everything.
I know it's awful. I know. Don't take the mystery out of marketing. I probably should say, don't take the mystery out of tax, but that's kind of what I do for a living is take the mystery out of tax. So I kind of feel like I have to go down that road. But seriously, you make a really good point is that, we'll spend all this money to market our products, to learn how to market, to hire people to market. We'll spend it on whether it's Google ads or Facebook or wherever we're going to put our money. And yet we're not going to spend the money on tax advice, which is our single biggest expense is taxes, why not put a little money there and see what the return might be?
I love it. Let me ask you. So making the news recently, a few weeks ago, this whole idea, I don't know if you saw it, that Warner Brothers wrote off Coyote versus Acme. So they produced this entire film, this animated film. They brought in all of this stuff. They had it completely done, ready to launch. And they went, no, we need the $350 million tax write-off. So they just wrote the project off. And this pissed everyone off. But it got me thinking, okay, so I have written off, so I've been in business for 17 years now. And I've written off, I think, 3 projects. And each time it was only when my clients refused to pay or went bankrupt.
Sure.
But I've never thought of these types of investments that we could be making, where maybe even increasing my risk profile to say, you know what, maybe I will take a bigger risk on this investment, because if it doesn't work off, I can write it off as a tax incentive.
Yeah, I don't like that idea. I'm going to tell you, I'm going to stop you right there, because I think that it's always a mistake to have the tax tail wag the investment dog. Okay, it's a tail. It's not the dog. So this idea that they dumped it because they could write that I'm sorry, that's a dumb idea. Unless your tax rate's more than 100%, that makes no sense. So in the U.S., our top tax rate's under 40%. I mean, if you add California in, it's 50. Okay, so let's say you're in California, you've got a 50% tax rate. Well, that means that if I dump a $150 million project, then I'm going to recoup $75 million. What about my other $75 million? That's out the window. I'm not getting that back from the government. So this idea that a write-off is somehow a good thing I'm sorry, it's a stupid idea. What's a good idea is there something I could do to actually build an asset at the same time reducing my taxes? Now, to me, that's a good idea. So, I hear all these people saying, well, I'm going to go buy a new truck, or I'm going to go buy a new car. I'm going to go buy new equipment because it's a tax write-off. I'm going, no.
It's amortized though, is it not? And
no, actually, in some cases you can write it completely off. But I'm going, well, I'm going to buy a new truck if I need a new truck. And if I have to decide between buying in December or January, might I buy in December? Yeah, because I'd rather have a tax write-off this year than next year. Okay. But I still have to pay, the government's only paying 40% of it or 50% of it. I still have to pay the other 50, 60% of the cost of that car. So if I don't need that car, yeah, I'm getting a discount from the government. But why would I spend money I don't need to spend? Rather, different way to look at it.
Sorry, and you're about to correct us, but isn't the mentality that most people think it's like, I could give the money to the government or I can buy myself something nicer. Let's go shopping.
But that's not true, because you're still giving, you're not giving money to the government, but you're still out money.
No, okay. I agree. My wife says I got it. I got it on sale, and I say, well, it's not cheaper than if you just didn't buy it to begin with.
Exactly. that is. I'll tell you what. That is the best analogy ever, because it's really, you just bought it on sale, right? You just got a discount from the government. That's all it is. It's just a discount. You didn't get it for free. But if you think about it, so one way I look at this is, look, if you earn money, the more money you earn, the more tax you pay. But the more wealth you build, the less tax you pay. So what we're looking for is, what assets does the government want me to have? The government's not really interested in me having a car. They're not really interested in me, frankly, investing in the stock market, except unless I'm in my RRSP or my 401k, right? And there's a limit on that, right? And they're pretty small limits. So they're not really that interested in me investing in the stock market. But what are they interested in me investing in? Well, they're interested in me investing back into my business. They're interested in me investing back into my farm. They're interested in me investing into solar or renewable energy or oil and gas, for that matter, in the U.S. I mean, huge tax incentives for investing in oil and gas. So they want me, I can build wealth and pay less tax. But most people, they're so focused on paying less tax, they forget about the building wealth piece. Well, I think that's a dumb idea. I'm going, why not do both? Because the tax laws in every country are set up for you to do both, as long as you have, the education, the information, and the proper tax advisors to help you actually go through the details to make sure you do it the right way. And so you don't end up, being somebody's girlfriend in prison.
So 3, 4, 5 minutes. Can you give me a high level? What should I do next? Like, help me in the audience. Like, what should we be doing? How should we be thinking about this?
Absolutely. Well, first of all, get a little background. Read Tax Free Wealth. Read Win-Win Wealth Strategy. These are my 2 books on how to do this.
And we'll link these books to Audible, to Amazon in the page. So if you're listening,
awesome,
go down the page and you can find the links.
Awesome. And then really, the key is going to be to finding a tax advisor who isn't on their own. Okay. You don't want one person doing this. You want somebody that's in a network or in a system or a franchise, somebody that has other people to talk to. They have a system that they can use, but they're not necessarily a big firm. Big firms, unfortunately, they're just like a lot of garbage in, garbage out. So you really do. It's like anything.
Looking for someone. We've done work in the audit space and with all kinds of different accounting firms, but so you're looking for someone with anywhere from like 5 to 50 employees?
Yeah, I think so. I think that's exactly right. I think you're spot on. I think.
Do they need backgrounds in audit? Do they need backgrounds just in tax planning, or what kind of account am I looking for?
I think they need a very broad background. Okay, so you want them with background in multiple disciplines, but they need to specialize in tax, and particularly in whatever your area is. I mean, for example, we do a lot of online resellers. So we have a lot of experience there. We do a lot of independent pharmacists. So we have a lot of experience there. We do a lot of real estate. So we have a lot of experience there. And there are specialties, right? So there are specialties from the tax standpoint. But mostly, I think what you want is somebody who is a good communicator, who isn't going to do it on their own, that's going to bring in other team members. Because really, your accountant should be the one. I mean, if you're looking for a banker, you're looking for a lawyer, you're looking for an insurance agent, your accountant should know all these people, and they should be able to help you find these people. So your accountant should do a lot more for you than just reduce your taxes, but they got to start by reducing your taxes.
That is so interesting, because when I was looking for a very specific type of lawyer, I did reach out to my accounting firm.
See, there you go.
I have no idea where to look. Do you know anyone? And they referred me to someone right away because, frankly, they're working on the same caseload all the time together.
Yep. They're great. They're great. Really, a good accountant will be a great networker for you.
Such amazing information. Tom Wheelwright, final question for you. I ask this of every single person, and I know that this is the how to keep more episode as opposed to the how to sell more episode, but I'm going to actually ask you, what is your number one tip or strategy to help us sell more?
Well, I actually think people forget to use taxes in their selling. Remember, the number one thing people hate is tax. Number one thing people hate is tax. So if you have something that might help them reduce their taxes, if it's tax deductible to them, if there's some tax aspect to it, I'll tell you what, you said it earlier in this conversation. You said, I just want to pay zero tax. People do want to pay zero tax. You are absolutely spot on with that. So if there's something, I find this with real estate people a lot, is that they forget that they are operating the biggest tax shelter on earth, and
in the U.S. In the U.S. Right,
and Canada.
But we don't have the capital rollover, I don't think, do we?
Oh my heavens, yes, you do. You
capital
do
gains rollover to reinvest?
Absolutely, you do, and you have cost segregations just like we do. So you have a lot of those things. You don't even know you have those things.
I don't even know.
Okay, you have a lot of things that you didn't know you had. And so there's a whole lot of things. Real estate is outside of business. Real estate's biggest tax shelter in every country. Every country. So Win-Win Wealth Strategy literally looked at 15 different countries. There are charts and tables, 15 countries. Read chapter 4 on real estate. We'll talk about those different. We include Canada. Canada's in there. So take a look at it and you'll see. But really, I think that, for me, it's all about education. So the more education, and this is what I think true marketing is, to get to your question. I think true marketing is education. I love David Sandler's book, You Can't Teach a Kid How to Ride a Bike at a Seminar. Because one thing he says is people hate to be sold, but they love to buy. So make it easier for them to buy. And the way you make it easier is to educate them, which is why I write books, is to educate people, make it easier for them to buy.
Okay, to wrap up this conversation, let's get into the 3-point roundup. Number 1, listen, strategic tax planning. It's important, right? Investing in a knowledgeable team, the tax advisor who's going to help you as a business leader, as an entrepreneur, as a business owner, navigate this extremely complex system will pay off dividends if you find the right people. Is it an investment? Sure. But it's an investment in paying fewer taxes to the government. I mean, that sounds like a good thing to me. Number 2, the government treats taxes as a way to control us. Ooh. They're less interested in incentivizing short-term gains like stock trading or outside retirement accounts. And they're much more interested in each of us investing in areas that will lead to economic growth. So this is business development. This is real estate. These are team members. These are assets. Let's take advantage of those credits rather than try to swim against the current. It makes sense to me to invest in areas that the government wants us to invest in so we can pay fewer taxes, right? And number 3, something that I've never really considered as a benefit from a sales and marketing point of view. But if your product or your service can actually help people pay fewer taxes. Now, Tom says the number one thing people hate is taxes. I actually think it's public speaking or death, but the tax guy says the number one thing people hate is taxes. And so if we can find ways to help people pay fewer taxes ourselves, that sounds like a benefit to me. Let's all do that. Let's all pay fewer taxes. So I want to thank Tom Wheelwright for joining us. You can learn more about him by checking him out over on LinkedIn. You can visit his YouTube channel. You can check him out on Instagram at Tom_Wheelwright. Or you can listen to his podcast, The WealthAbility Show, with Tom Wheelwright, available. Well, I mean, listen to mine first, but his is pretty good too. Now, while you're over on LinkedIn checking out Tom, you can also give me a follow. Find my profile, give me a follow, drop me a DM. That's where I hang out most of the time these days. One last thing, if you've made it this far into the podcast, you probably should subscribe. And here's why. Every week, I share practical strategies and tips just like what Tom shared with us today to supercharge your business growth and to boost sales. With that, I'm Mark Drager. I'll catch you in the next episode.